If you have a certain age, you might find today's cryptocurrency market somewhat familiar. The explosion of indices and tracking funds, the proliferation of new investment options, the wild trading action in shares of companies involved in the space. It's all a little like the tech sector in the 1990s, isn't it? But as the space expands, matures, and draws in untold billions of new investor money, how can you participate and why should you? How do you navigate the proliferation of options and the fire hose of information being thrown at you? And what do new developments, like the passage of the Genius Act or the explosion in stocks like Circle Internet Group, mean? To break it all down, I invited Andy Baehr, head of product and research at CoinDesk Indices, to join me for this week's Money Show MoneyMasters podcast. He has the answers and the insights any current or prospective crypto investor needs. Well, Andy, I really do appreciate you taking some time out to chat on the podcast. There's so much going on in the crypto space right now. Since I haven't had you on here before, you're going to be speaking for the first time at a Money Show event. Why don't you share a little bit about your background and kind of what it is you do there at CoinDesk?
Yeah, sure. So I've been in crypto for 3 years now, and before that, I had a 20-year career in traditional finance on the global market side and on the investment management side. Most of that time was building and selling products on derivatives desks at places like Deutsche Bank, Morgan Stanley, Credit Suisse, BNP Paribas, mostly in equities, but across different asset classes, and had a chance to work with both institutional investors like pension funds, but also by insurance companies, got involved in things like annuity markets and the risk management of those and ETF markets. So I loved all that business. I actually went then to the buy side and worked at a multi-asset quant hedge fund for 3 years as a partner. And we kind of did the same thing. We were serving pensions and endowments with alternative investment management strategies. But then, I started to get more and more interested in crypto and actually was thinking of launching an SMA platform for crypto. But then the sell side sort of vendors or service providers I was talking to said, well, we can't do a lot of that stuff yet that you need to have like an ISDA rails, kind of dollar-based SMA portfolio management system. Why don't you come here and build it? And then I went to one sell side shop to kind of build a structured product and OTC marketplace for them. But soon after that, I joined CoinDesk to really build the next generation of indices for the digital asset class. And it's been a great ride. CoinDesk was acquired by Bullish Group in the end of 2023, which is an institutional exchange. And that really turbo boosted our efforts to bring some of these products into the marketplace.
And I'm glad you brought that part up, that sort of transition and that adaptation from the traditional finance world into the crypto space. What are you finding when it comes to boosting adoption, essentially, especially in institutional and individual marketplace now? I mean, how is that process playing out?
It's so funny, crypto's the only asset class where it really started at the individual level, and it started in the form of passion, and for some in the form of hobbies, for others, but it happened globally and it happened in a very grassroots way. I saw more and more of my colleagues, especially and a lot of the really smart ones, kind of, who might have been dabbling personally in digital assets, actually make the move to go work for firms. And I soon realized that they were setting up the whole system just on chain. Things like prime brokerage, OTC trading, derivatives, hedge fund strategies. So from that sense, it really started as individuals with interest and passion, and then kind of professional grade, I guess, market structure started to evolve. But that doesn't necessarily mean that a pension fund or a financial advisor or an insurance company or a bank is going to actually deploy into digital assets the same way that they would think about traditional. That just requires a whole nother level of, I guess, familiarity, regulatory support and protection, product wrapping, right? You'll have a lot of people who will have exposure to crypto without actually ever, owning private keys or even having an account at a centralized exchange or a crypto custodian. So I think, when I got into the market, it was just the beginning of that crypto winter. My timing, as always, is perfect. Trying to predict the nadir of the nadir of a market cycle, much like my traditional finance career. So there was a lot of exuberance and there was a lot of speculation in a lot of assets in that 2021, early 2022 process. And there were, as I like to say, a lot of dirty dishes in the sink by the end of 2022. So it was a big reset for the market. Look ahead 3 years, and now you have what I would describe as a really, really vibrant and easy to access market for Bitcoin. I would say that every other important asset is not enjoying the same level of discovery, education, ease of access, proliferation, et cetera. And I think that's one of the things that we're working hardest on to try to get investors and traders to think about ways of kind of gathering or bundling top assets within the digital asset class so they can start to go a little bit beyond Bitcoin without specifically trying to pick individual names or trying to time individual entrances and exits.
Got it. And I want to talk about one of the developments you highlighted recently there. But before I do, you mentioned recently, I guess I saw your post about that people are going to be inundated with information about inflows. We've got SEC product approvals, product launches all over the place. How
Yeah.
does an individual investor, trader sort through all that sort of that fire hose of information coming at them?
I think, it's difficult, and I think if one were thinking about this, like let's pretend that you only were going to spend 5% of your time thinking about equities, right? And you really needed to allocate your time to your investments proportionally to how they're allocated. So if I'm only going to spend 5% of my time thinking about equities, well, I probably am not going to pick individual names. I'm probably not going to try to time the market. I'm definitely not going to have time to think about earnings or PE ratios or technical signals or sentiment or any of this kind of thing. I'm probably going to say, look, if I want exposure to this, I'm just going to buy an index product and I'm going to let the index do the work of diversification. And, if it's market cap weighted, letting the biggest names float to the top and kind of owning the marketplace. So that solves two problems. First of all, I don't have to tend to that. That can be
Yeah.
sort of set it and forget it, right? This is just classic investment advice. But the other thing is I'm probably not going to be alone, right? My advisor is not going to be at cross purposes with me in terms of that kind of strategy, and probably other prudent people will have at least thought about that same kind of passive. I like to say I've been in finance, but my son, who is 17, who was born in 2008, he's the best investor in the house because his college fund just went into index funds in 2008
Okay.
and rode that whole thing. He didn't try to time anything. It was just his college fund. So that passive approach worked out really well. So I think for digital assets, it's kind of similar. Right now, Bitcoin dominance, which is a term that we use a lot in the industry, which
Yeah.
represents how big Bitcoin is relative to the entire capitalization. Bitcoin's about, $2.25 trillion, and the entire market cap of all of crypto is about 3.4, 3.5. So it's about two-thirds of all of crypto is still Bitcoin. The narrative, I would say, is more than two-thirds. The narrative's like 80%. So investor has, well, is it Bitcoin or more than Bitcoin? Is it now, or should I think about timing? Should I think about, what's my accumulation strategy? It's very, very difficult. And I'll tell you, at least equities gives you weekends off and crypto doesn't. So I would say that we don't, we never give investment advice, but I'd say that the best thing to do is think about education. And the best thing to do when it comes to this new asset class is to gaze far into the future and think about how you expect things to be. Like my son, when he was born in 2008, he's applying to college this year. What does he want his outcome to be, and what does he think is going to happen in that economy? With digital assets, I try to gaze as far forward as possible, and
Yeah.
and make sure that all of that noise, I think, gets suppressed a little bit.
Well, and this goes back to you talk about and again, I saw the post you had on LinkedIn the other day, the CoinDesk 5 index and Grayscale having that fund that allows you to trade more than Bitcoin and that. Can you talk a little about that kind of development and what that means for some of these other cryptocurrencies out there?
Absolutely. And so we have two flagship multi asset indices. CoinDesk 5 is the perfect choice for investors. Again, not investment advice, but it's designed to be that next step for investors and advisors who want to take one step beyond Bitcoin. It's just market capitalization weighted of the top five constituents of a bigger index, but it ends up being the biggest and most liquid tokens that have certain exchange listing properties and certain liquidity properties. Right now, it's Bitcoin, Ether, Cardano, Solana, and XRP. These are familiar names to anybody who reads a lot of stories about crypto, so there's no big surprises here.
Yeah.
But for those people who want to maybe not own that giant market portfolio, but at least take a step beyond, for advisors who want to think about getting other assets outside of Bitcoin into a portfolio, but proportional to their size and without having to think about, well, really, what am I going to pick? CoinDesk 5 is sort of a perfect kind of handful of crypto, right? There's 5 tokens in there and it gives you a handful. CoinDesk 5 represents still, because of Bitcoin and Ether dominance, 81% of all of crypto. So you're still getting a lot, right? Um, because of Bitcoin dominance, between 75 and 80% of the weight of the CoinDesk 5 is still in Bitcoin. So you're not going too far away from shore when it comes to starting with Bitcoin and adding the rest. So that we can't talk about the Grayscale product because it's still in this SEC review. It's the SEC decision was stayed, so we're watching developments there. But that the fund that has filed for uplisting, has almost $800 million in it, and that's a multi-year. That product originally got launched in a different form back in 2018. So it's a very consistent investment process that's done super well. Our other index is CoinDesk 20, and I would like you and the listeners and the viewers to think of CoinDesk 20 in a way kind of like the QQQ of crypto.
Okay.
So if you're as old as I am, you remember when the QQQ ETF was launched. And if you were sitting on a derivatives desk like I was at Deutsche Bank, you kind of know why it was launched. It was launched because people wanted to trade a lot of tech stocks, and some of them were not very liquid. So by having an index of 100 non-financial tech stocks that were listed on NASDAQ, you could sort of drag around all 100 names in this liquidity wrapper in this new product called an ETF. And I would sit there on the desk, and the ETF trader would make markets for hedge funds, and the sales traders would be there, and they'd lock markets at 100,000, or they, charge 2 or 3 cents a share. And that was a very important business. It was a profitable business, but also for the hedge funds and the other customers who were using that liquidity service, it was a great way to move in and out of all 100 names.
Yeah.
Crypto's kind of the same. So CoinDesk 20, we developed it in the same vein of we want to generate liquidity in the top 20 names. And we want a more diversified and broader based index. So CoinDesk 20 is 20 top names, but we cap Bitcoin at 30% and we cap all the other assets at 20%, which pushes a lot of that weight into the smaller names. Then our parent company, Bullish, which has a spot and derivatives exchange, launched futures contracts, perpetual futures contracts on the index. And this was the first time that an exchange had launched perpetual futures on an index, and it took off right away. Market makers and hedge funds and OTC desks love this idea that there was this meeting place, this new locus of liquidity where all 20 names could be traded at once, long or short in the perp. And it just became a gathering place for, much like QQQ did. So that spurred a lot of OTC trading. It spurred structured products. Right now, WisdomTree back in February launched an ETP on CoinDesk 20, which has just over $100 million in it. Of course, we'd love to have products in the United States and can't share too many details on that. But trust me, when it comes to ETFs and derivatives, we're very much thinking about ways that we can get CoinDesk 20 to everyone. Now, let's contrast those two indices. CoinDesk 5 market cap weighted, pretty close to shore. It's your first step beyond Bitcoin.
Yeah.
CoinDesk 20 QQQ goes pretty deep, spreads the weight out across the names. Think of it as a much more balanced and broad exposure product. Fantastic for risk management, fantastic for trading. It's actually more volatile than Bitcoin. So if you're an options trader and you're looking for vol, you can have vol and diversification at the same time. And the most traded index product in crypto right now. So we love having these two things on our shelf as the market moves from, as you're asking about, your first questions are, what are we doing after Bitcoin? How do we apply traditional investment principles to digital assets? These two indices really stand there to be the two solutions that we like the best, and they're coming in to this chapter of the industry, with serious credentials in terms of assets under management and liquidity.
Got it. The time we have here, I would feel remiss if I didn't talk about stable coins and everything that's going on there. I mean,
Yep.
what is the passage of this Genius Act process for people that aren't really sort of in deep in the weeds in the crypto industry? What do they need to know about that development, and what does it signal for the stable coin part of the business?
Yeah, I'm so glad to see this happening. The more, we initially you start to once you're in the industry, you initially start to encounter stable coins because look, once you have money on chain, on-ramping and off-ramping to fiat currencies, to dollars or to euros, it kind of becomes a headache. It becomes expensive, and then you're talking about, well, I have this in an exchange here, but I have these dollars over here. So a lot of people just keep their kind of neutral money in stable coins. And in fact, if you go on crypto exchanges, a lot of the trading pairs, right? Bitcoin USD is one trading pair, but Bitcoin USDC is another one, and Bitcoin USDC is the third, and they're all liquid. So certainly those who are engaged in crypto a lot are very, very used to this idea of keeping their stable coins, their sort of neutral or dollar peg value in stable coins. And then you hear all the stories about different countries where getting hold of actual physical US dollars is difficult, but having a local currency that's very volatile, that people are transacting every day in stable coins. They may be listed on different blockchains, they may be Tether, but the actual use case and the improvement of quality of life of just having stable coins every day on people's phones is important. So the Genius Act kind of recognizes that and says, like, look, the US wants to have a framework where public blockchain stablecoins can become part of the financial kind of furniture. Why is this a good thing? First of all, regulatory clarity, as anybody who is in the industry will be happy to repeat, is welcome. It's regulatory lack of clarity that's the hard part. So regulatory clarity is amazing. The second thing is, right now there's $250 billion of stable coins. Many people say that that'll 10x in the next 5 years, right? So I'm probably even more aggressive than that, but I think that growth path is just going to be, exponential. And those stable coins have to be backed by things like US Treasuries, right? So think about it from the point of view of the government. Now that what we've learned, I think, in some of the tariff and trade wars is that treasuries have become kind of a chess piece, right? They become a political instrument of influence more so than ever. So if the government can identify that stablecoin asset-backed pools can become a new multi-trillion-dollar customer for US treasuries, this is fantastic, right? This is great for the government. It underscores the safety of the asset base that is backing the stablecoins, but it also creates this new source of demand. So this is fantastic as well. The use cases for stablecoins, I mean, just having this, I guess, not really caring whether the money in a wallet for a bagel or for a movie or for a theater ticket is in US dollars or USDC, or other stable coins. It's just going to improve the fluidity of payments, right? One thing that I like to do, this is certainly not a recommendation, but it's something
Sure.
if I go to dinner with somebody and they pay and I owe them for my part of dinner, instead of giving them cash or sending them, transmitting money to them electronically, I'll help them set up a wallet, and I'll send them, $100 in USDC and a little bit of Solana, a little Ethereum, so they'll have some money for transaction fees, and say, go, like, this $100 will be much more useful to you because you're going to discover what you can do with it. And that's much more than the fiat cash would have been worth. So it is highly significant. The last thing, I know it's a long answer. We have so many thoughts on stablecoins. When investors think, what is blockchain good for? Why should I think about Ethereum and Solana and Ripple and Avalanche, all these layer ones, and Sui and XLM and Hedera, all these layer one blockchains or attachments to layer one blockchains? All of those stable coins, they're not their own blockchain. They have to sit on another blockchain.
Yeah.
And therefore, every time a stable coin moves, a blockchain event has happened and a fee is paid to that blockchain. So right away, you're talking about a huge significance of new users to come in to have these transactions take place. So not only will that battle test a lot of the newer blockchains, I don't think that Ethereum needs much more battle testing at this point. It's done a fantastic job. But it will give opportunities for improvement for those blockchains. It will also just have people be used to having blockchain events happen in their everyday lives. I think that for broader than Bitcoin digital asset investors, they'll start to see some pickup from that activity. So it is it's interesting. It's not under predicted that stablecoins would be the first thing that kind of got done in the new administration. We're delighted to see that it's actually happening.
Got it. And I guess just again, if a mainstream investor sees some of the crazy action in a stock like Circle Internet Group, or they may have heard bank charters, some of the companies, Ripple Labs and so on, that are looking at what's behind those kinds of moves. And again, it's not investment advice. I'm just curious, what's driving that sort of frenzy there?
Funny thing is, like, it's once you're in crypto and you look back at stocks and you think, like, wow, that's crazy. So, I think look, we don't comment much on stocks I at all, actually, and we certainly, as you say, don't give investment advice. I recall many times in my equity derivatives career where you'd have thin float companies in new industries where stocks ended up being quite volatile and chased after. I think the enthusiasm is great. The volatility always, I think, makes things tricky to manage tactically.
Yeah.
But I think that there is genuine enthusiasm, and I would treat maybe the crypto treasury companies separately from this, but from an actual business that very early on went to a regulatory forward path all the way from the beginning, while still running a business that was profitable. And I happened to be on the floor of the New York Stock Exchange just coincidentally the morning that Circle rang the bell. And I've been to my fair share of bell ringings on the floor of the New York Stock Exchange. It was like nothing I've ever seen. It was there were people in the rafters. The whole floor was crowded. It went online. It was a big party. I think it just represented, in a way, that particular part of the christening of the new asset class, and businesses that kind of make sense to equity investors. After that, and remember, it came public at 30 or some number like that. So after that, it's when it took off, then I don't know. I just watched with amazement and delight.
Understand. Andy, you're going to be joining us for our August virtual expo. It's coming up the first week of August on our platform. Can you just give people, again, we have mostly an individual investor audience. What are some of the things you're going to be talking about there? What are they going to get out of attending that presentation?
I think, look, it's not too different from what we're talking about here. I think it would be interesting to know. I think most people by now will have heard of Bitcoin, and maybe some will have added it to their portfolios with the ease of process of either having Bitcoin owned directly or via ETFs. I think that as more and more legislation gets passed and more other names come into the news, people are going to start to think, what's next, right? And I think it's a very important time to help people get educated and navigate that change, because as we said at the beginning, crypto started as a project of retail and enthusiasm and a lot of speculative trading. And it doesn't have to be that way, right? I think that common sense, investment principles, and patience can be part of a digital asset investment strategy. You don't have to YOLO your way into a meme coin in order to participate. And so I think a great foundation of what we'll want to talk about is, what the market structure looks like, how important Bitcoin is, how we think about indexing the market and benchmarking it, and when advisors and individuals start to think about how to allocate and really kind of invest for the long term, they can all be like my son when he was born in 2008, right? They can buy at this period and hold for a long time, and see the results of this new asset class. So I think it's just important for people to sort of bridge this idea of their long-term relied upon strategies for managing their investments in a prudent way and seeing how that can be applied to this brand new asset class.
Got it. Well, Andy, again, thank you so much for your insights. Viewers, if you're watching this and you want to learn more from Andy, be sure to check out that event. It's called the Value Proposition and Value Investing Virtual Expo, but obviously we are covering other asset classes, including crypto. It runs August 5th to 6th on our Money Show online platform. You can register for a free pass using the link in the description. Andy, again, thanks so much. Can't wait to see what you have to say in August.
It was a delight. Thanks so much.